You're tuned in to the It's Real podcast with your hosts, Kayla Callender and Andrew Yagi. Each week, we'll talk about what happens behind the scenes working full-time in real estate and share with you real-life stories, our successes and failures as we work to help consumers and industry professionals reach their real estate and real-life goals. Here we go.
It's episode 56 of the It's Real podcast. I'm Kayla Callender, and I'm a mortgage lender.
And I'm Andrew Yagi. I'm a real estate agent.
Hi, Andy. How are you today?
Kayla, I'm doing really great. Another week, new opportunities, more beautiful weather. Had a really great weekend as well.
Good. I'm seeing some colder temperatures in our future, and so fall is here. I cannot believe that we're almost to October. It shocks me, but with that comes a different real estate market. Comes just different feelings like football and coziness, and we Midwesterners go hard in the summer, very hard. So it's almost like a calming effect. Although your kids are back in school, does that mean that it's calmer at the Yagi household, or is it busier?
You know, I would say for the longest time, I always looked forward to summer, and I still do. And it's great to be able to travel and take trips and just have a freer schedule. However, it's also challenging with real estate being so busy. So as much as I love summer, it is nice to get back into school and get into routines. It's good for everybody.
Yeah. Every now and then I'll tell my friends, I'm like, I could use a real good blizzard right now. And I'm like, not the Dairy Queen one, like just a blizzard where like you're snuggled in with your home and your kiddos and your fur babies, and you just like chill. It's like sometimes we just need that. And I know it's coming, but I know I'm going to be very angry when I can't wear my heels outside because I'll be slipping on the ice. So enjoying this while we can.
Winter is coming, Kayla.
It's on its way. I know. I hear you.
So, Kayla, last week we saw, of course, the big news with rate cuts, the Fed, cutting things 50 basis points or 0.5%, again, which like we talked is really great for consumer debt, for HELOCs, the commercial sector. Obviously, the mortgage market had already priced that in. But a lot of opportunities coming in, and I've already seen, maybe a little bit of a pickup. Even with people inquiring about properties, maybe a few more showings, as we've seen showings on some of our listings a little bit quiet, which generally does happen around Labor Day. But I think, kind of, even though, again, some people would expect that, mortgage rates are going to fall more, it was already priced in. But I think there's really a perception out there that, hey, now's maybe a better time, to buy a home because the Fed is cutting rates. What do you see out there?
There's a lot of activity, a lot of conversations happening. As we're speaking now, you can probably hear my phone even going off because clients are like, what does this mean? Is the market crashing? What does this mean? Do I wait till after the election? As I'm sitting here, I see applications coming in for people that want to refinance. And so I say that because there's just a lot of buzz, and that's good because the consumer does not know all, and that's where they need to rely on the experts. And so what I'm seeing is a lot of conversations around refinances right now. I'm seeing a lot of conversations about clients maybe coming back into the market that were on the fence. Maybe they couldn't, afford that house that they wanted, and now maybe this, the rates coming down 50 basis points or 0.5 point is what they're hearing. But in reality, what it's meant is that we've seen that decline this month in September, like you've said, Andy, and we're just going to continue to see future decline. So what I'm seeing is a lot of buzz, but what I'm going to probably see in the future is clients taking that next step to just do an application, to have a buyer consult, because they're going to want to get prepared, especially if rates continue to decline into 2025 like they're anticipating.
So last time when we talked, we looked statistically in just that, as rates have fallen, we've seen mortgage applications go up, then kind of dropped off, then, maybe increase a little gradually. Are you predicting that we'll probably see an increase in applications?
I do. I think we will. I think that what's going to happen is applications are going to rise, even if people don't do anything. I think consumers are getting more serious about, where am I sitting? What does this look like for me? So I really think that we will see an uptick for sure.
I want to talk today a little bit about refis, but before we get there, because I want to pick your brain a little bit on that, I had come across another article as we kind of talk about applications increasing, and I thought it was really kind of interesting to see this report that second home mortgages decline amid economic uncertainty. So in August, mortgage rate locks for second homes fell 13% year over year, and that's the lowest level we've seen since 2016. And actually, I think, when I look at kind of the stats on some of the lakeshore, like in our area,
Yeah.
there's still been a lot of activity, but it's maybe not quite on par with what we've seen in past years. What are you seeing?
I think there's just a lot of uncertainty in general. I think that people are living more paycheck to paycheck, not that everyone is, but there's a lot less money to go around to be used. So people don't want to have a current home maybe at, whatever rate they're at. They could be at 3-4%, they could be at 6 to 8%, and then have another property on top of it to take care of. And I think people are really trying to keep their funds close to their chest because of the uncertainty, especially with an election year, especially with not knowing what's going to happen. I mean, we've seen stats, we've seen TikToks, we've seen so many different posts about what the average grocery store shopping trip looks like now versus 3-4 years ago. And it's crazy. And I say it all the time, Halo Top ice cream used to be $4 and some cents, and now it's $8. Like, I'm not buying my Halo Top anymore. I'm buying Yasso. I'm just saying. But I say that because it really does impact people's confidence in spending. And I mean, even I can tell you, Andy, like, we talk about buying windows for our lake home, and that's not cheap, but it's like, do we do this? Like, what if something happens? And I think people think about that when they think of second homes, especially. I've even had people say, you know what, I'm going to put in a pool. It'll be cheaper. I'm going to do that for now. And then we'll explore the lake home maybe if rates drop in a couple of years. So that's my long tangent and my thought about it.
Well, and I think that's well said. And interestingly enough, to kind of tie in, I came across this article as well. So you talk about the second homes and people maybe being a little bit more strapped, living paycheck to paycheck, or just holding cash close to the vest, so to speak. I found this article about Mariah Carey and the fact that she paid cash for her Tribeca penthouse, $9 million in '99, and she's borrowed $18.6 million in mortgage debt against it to fund her lavish lifestyle, which, Kayla, I think you'd appreciate this and would maybe do the same if you were Mariah Carey. But this spending includes $45,000 a day dog spa days.
Wow.
What do you think about that?
Amen, girlfriend. You do you. I think that's awesome. Like, was that $45,000 in dog?
45 grand. Could you imagine spending 45 grand in a
Yes.
day on your dogs?
Yes, on my yes, on my dogs. Yes, I mean, come on, like chiropractic, like laser therapy. We could do acupuncture, like
Yeah.
like the paw massages. Think of the things.
Kayla, I thought you grew up in a small North Dakota town in kind of a farming situation.
I did. We were poor. We
You had a farm dog, and that was about it.
that was about it, and it slept outside. And I remember when we were going to get our first dog in 2015, my husband's like, yeah, we'd get a dog. And I said, well, we don't have a fence. Where would it live? Like, what? And he goes, Kayla, it would be in our house. And to conceptualize that from being on a farm, that was hard to understand. But
And now, what do things look like 4 years later?
I mean, they're yes, all 4 pit bulls, and yes, they're pitty mixes. They're all rescues. Everyone asks, "Do you really have 4 dogs?" Yes, I do. They're well behaved. They're wonderful, and they are cheaper than children. So I've heard. I don't know.
Sure. Awesome. Well, hey, Kayla, I want to talk refis a little bit today.
Yeah.
So, first of all, we use abbreviations and just talk about these things like they're common sense, but there are probably some people listening out there today that say, "What in the world is a refi? Like, what
Yeah.
does that even mean?"
Yeah. And so a lot of people really don't know what it means. And a lot of individuals think that it's a click of a button. Some think it's super strenuous. And at the end of the day, a refinance is basically, we're just redoing your loan. We're going to do a new loan and pay off your old loan. So the new loan, essentially, the goal would be to either, decrease the term. So maybe you want to go from a 30-year to a 20-year. Maybe you want to go from an FHA loan to a conventional loan, or maybe get rid of mortgage insurance that you pay monthly. And a lot of reasons is because you might want to get a lower rate. Obviously, who doesn't want a lower rate, a lower payment? And what we've seen a lot in the last few months is cash out refinances, meaning you're taking out the equity to pay off things or to pay for things. I just had a client that we did a cash out refinance for because their consumer debt was between 15% and 25%. And so it made sense to go from a 3% mortgage rate to a 6% rate over 30 years, then have all this debt in a 5-year term at 15%, credit card debt at 25%. So we freed up hundreds of dollars in their monthly cash flow. So the purpose of a refinance is to get rid of something else and to acquire something new. And usually it's going to be for financial purposes.
Sure. Very, very cool. So I did a refinance once, and it was back, during COVID. And I think we've talked often about that time frame,
Yeah.
just how it was madness. And so that's the only refi I've ever done. And it was kind of a horrendous experience that turned good because we were working at refining. We had bought our home in 2018 and had done a 30-year mortgage. I was kind of, buying some investment properties thinking, okay, I want to keep cash flow more manageable. And I think at that point we got a rate of 4.625. So fast forward to, the COVID era, 2020, it's like, wow, rates are so low. And at this point, I want to drop down. I want to change the term from 30 to 15, and I want a better rate. So I had locked in with a certain lender, 2875. Well, in the chaos of everything, it was, you talk about, lenders not getting back to you or not being good communicators or appraisals getting pushed. Just because of everybody wanting to jump on the bandwagon. Well, Kayla, I've told you the story before, but in the meantime, I ended up, going and changing employment. Everything was supposed to be done before I left, and it wasn't. So because then I went into real estate and didn't have the regular employment, the lender said they couldn't do the loan. Well, they could have done the loan, but they didn't try very hard. So we were actually able to get it done and refi with just my wife's income, and actually got a better rate of about 2.375, which we have right now. So what was a bad experience with another lender turned out to be a great experience. How many people have you seen out there that haven't had good refi experiences, and what would your advice be for them?
I feel like for all of my clients, no matter what you're doing, whether you're buying or refinancing, buying is a lot more exciting and stressful. Refinancing is, it's okay. I'm excited to save some money, but I want every client to feel taken care of. I want them to know that they're being educated and empowered. And so what I'm seeing in the market are a lot of people that have had bad refi experiences. I think that it is seen as just transactional. And so I tell you that because a refinance is still moving your money. We're having so many options available for clients. I'm seeing clients chase a rate to save $100 a month when in reality they could be saving 300 if their lender would just educate them on the forecast and what that means. Or paying points, they're paying 15 grand for a lower rate when in reality they shouldn't be paying so much, knowing that maybe rates are going to decrease. So I haven't heard a ton of bad experiences because I think people are less likely to talk about those experiences than when they buy and they don't close on time and the moving truck is there and they couldn't sell their house on time. But at the end of the day, clients, it's not just about the interest rate. It's just not about oh, I saw Rockets at 4.99 and their APR is at 7.3. What does that mean? It means they're charging you a ton of money for that rate. And you need to be having a refi strategy consultation because it's not as simple as just saying, oh, lower rate. Okay. It's literally talking about what are your goals? What is your monthly payment goal? Is a 25-year better than a 30-year? Are we going to start over on a 30-year? What does your mortgage insurance look like? What is your goal for? Do you want to skip a payment? Do you want to skip 2 payments? What do your escrows look like? Because when you do a refinance, we have to make sure that if you're escrowing, meaning we're collecting insurance and taxes in your payment, we need to make sure that you're whole on your new loan so that when it goes to pay out, there's enough in there. So we have to collect all that. Are we rolling that into the loan? What does that look like? For every $1,000 roughly you roll in, it's about a $7 difference depending on the rate, $6. But there's so much that goes into it, Andy, that's why I strongly suggest if you're curious, have a consultation. Don't just call a lender and say, what's your rate? Because they could quote you, yeah, 4.5%, but what's the cost? And what does the future look like? So I encourage all my people, and I'll put on my social media too often, like, have a refi strategy call. And I have a link in my digital business card and in my email where you can click that, because it is just so important. It's your money. It's your future payment, and knowing your goals, knowing what your current payoff, knowing everything in advance allows us lenders to be able to curate options that best fit you, because I can give you 30 different refi options if you want them. 25-year, 30-year, 20, do you want to do a 27-year? What do you want to do? What makes most sense? And then we let the client decide.
Sure. I love that. So one final question, Kayla, on refis. Is now a good time to refi?
Maybe. It depends on the client. It depends on your goals. So I'm refinancing people now. I also have had probably a dozen people that I've talked to in the last 2 days that said, I'm going to wait. Nope, I want to see what happens. Roll the dice. And if it were me, I would, depending on my situation, of course, I would maybe roll the dice a little bit, because some people are going to say, just get it done now, save money now, and then refinance later. Remember, it costs money to refinance, from title work to appraisal. Even if you hear there's no cost, there are costs to do it. Even though it may look like your bottom line is bringing zero to closing, a lot of times you're going to see that it's probably going to be rolled into the loan. So it depends. It really depends.
Awesome. Well, Kayla, I think that puts a wrap on episode 56. If anyone is interested in talking refi, I think we'll include your link, kind of below this episode, wherever you're watching it. Because, I think obviously you're a great resource, Kayla, and I'm sure a lot of other lenders out there, provide great service. But I think there's just something about your approach that it seems, you seem to go a lot deeper and dig into the big financial picture. And that's what I appreciate about you.
Thank you. And at the end of the day, if it doesn't make sense, or I think that, you shouldn't do that, I'm going to tell you. I'm not going to do your loan and then just to do your loan. I'm going to let you know my thoughts. But at the end of the day, you're going to get educated so that you can make the decision for yourself, so that you say, I made this decision because Kayla educated me, not because Kayla told me to lock the loan and move forward. So
I love it. I love it, Kayla. Well, thanks so much for sharing all of that on refis. Have a great rest of the week, and we'll look forward to connecting next time. See you, Kayla.
And see you later.
Bye-bye.